This is today's Daily Market Comment here at XM.com by Mario Sajikiriakos. I'm Christina Marujos. The latest U.S. employment report will be in the spotlight today. Nonfarm payrolls are forecast to have risen by 150,000 in January, but market participants are probably positioned for a much weaker print by now after the ECB print turned negative. In the markets, the knee-jerk reaction in the dollar might be negative as trading algorithms react to a disappointing non-farm payrolls print. However, any weakness is unlikely to last long, since a soft number wouldn't represent the true state of the labor market, which is actually quite tight. Indeed, Fed officials like Thomas Barkin have already said they would view any disappointment as a temporary setback, given the COVID numbers for the month. For the Fed, wage growth is the most important metric at this stage of the cycle, and if that fires up today, it could overshadow any misfortune in payrolls. The European Central Bank poured gasoline on speculation that higher interest rates are on the menu for this year, stressing that inflation may be stickier than expected and that monetary policy will likely have to respond. In essence, the ECB wants to speed up the taper process so that it has the option to raise rates later in the year if the inflation outlook demands it. All this ignited a stampede in the market as traders rushed to price everything in, catapulting European yields higher and sending the euro into overdrive. Around 50 basis points of rate hikes are now priced in by year-end, which is probably on the optimistic side, but not completely unrealistic. While euro-dollar is riding this ECB repricing higher, the big picture hasn't fundamentally changed so long as euro area wage dynamics remain muted, and another hot U.S. inflation print next week could turn the momentum around. The Bank of England did not disappoint either. It raised rates by a quarter point and announced plans to reduce its balance sheet, but sent a very hawkish message with 4 of 9 officials voting for an even larger rate increase to combat inflation. The pound spiked higher on the news but quickly surrendered most of its gains, with euro sterling reversing in spectacular fashion after the ECB also raised the stakes. In the equity space, Wall Street lost ground as higher yields and the fallout from Facebook dampened the mood, although some blockbuster results from Amazon after the bell seem to have restored order to the force. Thank you for watching today's Daily Market Comment here at XM.com. Have a great weekend.